All right, YouTube, what is up, guys? This is day 12 of the 2K to 10K flip challenge, and this is the last trading day of this week. We went 5 for 5 this week. We're on, I think it's a 7 trade win streak now. It's 1, 2, 3, 4, 5, 6, 7. We are on a 7 trade win streak. We have won 12 out of 13. Let me make sure you guys can see it. The account is up to $4,668.47. We are over doubled now at this point. We just need a double, probably like just over one more time to get to that 10K. This was only a 13.9 pip trade, but because our lot size is increasing, we have made $236.30 on this trade. Now, this is going to be a teaching lesson to end the week off. I am not only going to break down this trade, but I'm also going to break down these 3 pairs. I want you guys to get better at selection. I want you guys to understand why this trade was the trade we absolutely should have taken, and not on any potential setups on Euro, on New Zealand US dollar, and US dollar yen. So before we even jump into this winning trade, I'm going to show you guys why all of these trades were not winning trades and why you shouldn't have taken them. Now, Euro US dollar, I'll go to the daily really quick. The daily did break lower than this candle. The only candle this closed below was this point right here. Now, what are we, looking for in the 15 minutes? The same thing every day, guys. Basically, when we're trading ICC, we're basically looking for a point to be broken like this. And when this point gets broken, you have a point of interest. And then basically you're looking for now price to pull back and to get put back below it again for you to take a short position, vice versa for long positions, and to be retargeting this low right here. So now here's the thing. I had to do that for the people watching. So we had this daily level over here, way over here, basically taken. Last time price got below that low, we got down here, right? So the draw on liquidity would be right here. Now here's the thing. This gray zone is when a new day starts every day. Not only is it when a new day starts every day, it is 5 p.m. to 6 p.m. That is the 1 hour overlap on when the spreads widen and the markets change hands. Now, you are not going to be trading in that time because you'd probably get put in down here because the spread's so wide. Here's the thing though. You don't get an entry on this pair because until, I'll zoom in some, if you guys understand, we basically need 2 things to happen for us to get short. And you're going to see more of this in the winning trade example, the exact structure, because we actually do take an entry. But basically, what you're waiting for is price to be back below this line, which we have after 6 p.m. But you also need candle ranges to go downward. Now, when I talk about candle ranges going downward, or basically switching direction, they need to be in your direction, right? The whole idea is that if we're looking for a buy, right? Let's just say these are all red candles, right? These are all down candles. Black is the same. A lot of people use black candles for down candles. These candles are breaking each other's structure going downward. That means you're in a downtrend. When we're entering on the 15-minute, all we need is for this structure to get broken. So if we need candles to go the other way, we need structure to get broken the other way. And then that is the first indication. I'll even do this. I'll make it white so that you know it's a different candle color. Now you know candles are going the opposite direction and that they basically have changed their trend. And so that is the whole idea behind these candle ranges. We use the daily candle ranges to know which direction we're going, and then we use the 15-minute candle ranges to get in entries when we basically pull back and continue our trend. That is the whole picture. I mean, this is probably one of the most beautiful drawings I've ever drawn on TradingView. I don't know how it came out so clean. It's usually a mess, but that's the whole idea. So when we want price to be below this level, we also want the candle ranges to be closing lower. Here's the problem though. We had already been playing around this level a lot yesterday, and yes, I was interested in taking a re-entry, but you could see right in here, candle ranges are closing higher and higher and higher right up here, and then we're in this candle range. So we can't just enter at 6 p.m. right here on this red candle because candle ranges are going higher. So we would have had to wait till 6:15, and when this candle formed, our entry would have been down here. Here's the thing though. This is why you don't want to take Euro US dollar, is because if you look at where you'd have to put your stop way above that most recent swing point, way up there, and then your take profits way down here, you don't even have a 1-to-1 risk to reward. When trading this strategy, in my mind, if it doesn't give a positive risk to reward, it's not a proper pullback. It's not something that the bigger money's going to want to take. And the whole idea behind this is we want to trade with larger money. When you see the draw on risk to reward, when you draw on your risk to reward like this and you see that it's negative, you can best believe that you're not going to be entering with big money. Um, Sorry, I had to take a sip. So does this trade play out? Yes, this still down here is still the draw on liquidity. This is still where price wants to go, and you can see that it did get there. But it failed this one, and that's why. It's because it's negative risk reward. That's not why I wouldn't want to be taking this trade. That's why I didn't take it. And even if it did play out, so be it. Now, New Zealand US dollar, the same exact reason. If you look on the daily time frame, guys, just so you guys know who are new, I'm gonna always I sometimes I feel like I forget. On the daily time frame, we're looking for a close beyond another candle. It's like yeah, it's just a break of structure candle. That's all we're gonna call it, a daily break of structure candle. When this daily candle closes beyond this one, that's considered a break of structure. It broke this structural swing low from the previous day's range. We closed outside of previous day's range, and so previous day's range, that's a point of interest. Now, this point of interest, however, you can see right here, the low of the previous day is literally right here. And then it literally gets, that point gets taken, it gets matched literally in the spread widening time. There's no reason to be taking a trade in here at all. No reason whatsoever. This move already happened. It happened during the spread widening. This is not a pair I would disregard it completely. That is why I disregarded it completely when looking for setups. USD JPY, the cleanest of them all, it just didn't give the entry confirmation signal, and I'm going to show you guys that right here and why our entry confirmation helps us so much. A lot of you guys probably had your eyes on US dollar Japanese yen because you could see such a clean candle closure above here. You drew on this line as your break of structure point, and then we dropped to our 15-minute. Guys, we're only using the daily and the 15-minute for the most part. That's all I've used on, I think, literally 12 of 13 of our trades so far is the daily and the 15-minute time frame. It does work on others. I just love these time frames. The daily levels to me are gold. So I'm going to show you guys this now. Guys, remember, going forward, this gray box is always going to be that when that new day starts. So you can see on any given day that this is one trading day. This is another trading day in between here. So it's just going to separate the days for us. And the gray box total, like I said, is going to be that entire spread widening. So you don't want to take trades until after that gray box ends because that's when 6 p.m. ends. That's when the spreads narrow again. Neither here nor there. This basically we had this line right here, this point of interest. Oops, sorry about that. We had this line right here, that previous day, that point of interest that we wanted to pull back below, get back above again, and then we wanted to match that draw on liquidity way up here. But we never took the long, and why is because yes, price did, I'll zoom in, price did get back above our point of interest. It did get back above our point of interest right here. We had candles closing above it, but we were stuck in a bearish range. We were stuck in a bearish 15-minute range, and price refused to get above it. It tapped it. It did not close above it. We need to close above it. Then it came down, and it created a new bearish range right here. This bearish range closed outside of this bearish range, and we were in a new one. And you can see, instead of actually breaking out higher, we don't get higher and we don't break out of that bearish range, and we just keep getting bearish and bearish to the point where we're not even close to our point of interest anymore. And the point of interest is that line we want to buy above to target draw on liquidity right here. So I hope that these breakdowns probably are going to help you guys more than the winning breakdown, because the winning breakdown is the same thing every day. There's nothing new about it. It's the same set of concepts and principles put all into one simplified formula to take these trades over and over. And you're going to see on AUD US dollar, we get the clean, just as clean of a setup as US dollar yen. We have Thursday closing below Wednesday, creating this low of Wednesday being our point of interest. We want to pull back above it, and then we want to short and match Thursday's low. So we go to the 15-minute. You guys can see the trading day starts below it, and then it starts making its way back up to pull back above it. And you can see when this happens, let me do this, start new. We're going to bar replay it. That way you guys can see the moment price starts pulling back above, right here, we close back above the range. It's important for me for it to close back above. That means price has accepted being inside that range again. It did, even this wick right here, it's not enough, right? I need price to close inside of the range. That is going to be enough of a pullback for me because price has accepted the range. And now that price has accepted the range, I'm going to continually drill this into your guys' memory. You need two things and only two things to happen. You need price to go back outside of the range, so back above that point of interest, back below that point of interest, back below this low, that swing low we have drawn on, and then we need it to switch candle ranges. So if we're going to track very carefully, I'll even use a box and I'll even go back. The first thing you're going to want to do is when price breaks out like this, you're going to want to draw on the range. It broke inside of the range. Let's draw it on black. That way we can see it a little better. Now you're going to want to make sure when price gets below our point of interest, this red line, that the candle ranges are going down as well. So I marked it up red. Now you can see this blue candle breaks out of our box. So we draw a new box around that candle. Now that candle gets broken out of right here. You're always drawing the new box around the breakout candle, and you could see you're inside of the range. You're always going to know which range that you're inside of when you do this. We are still in an upward range. You have to understand too, which way did it break out? It broke out upwards. So now we have a breakout down. So we're inside of this range. Let me make sure that's locked on right. So we're inside of this range. Now you can see we're in bearish ranges, and we just closed below that level. We get on the next candle, and then we get our entry, and then all we're doing is we're putting stops either at here, or like I like to do sometimes if it's a little close, 2 pips above there, just for the sake of spreads. And then you draw on the liquidity, which was that previous point that price went to when you got below that swing point. Last time we were below here, where did we go? We went here, right? So we want to go there again. And that's all I've been doing over and over again, every single day, every single trade. It's the same exact setup. And so you guys can see price goes and hits our draw on liquidity. And what's it do? This is also a telltale sign that you know the draw on liquidity is the draw on liquidity, is because look at the reaction after, right? You see it goes there and then it starts reacting. And then whatever happens after that happens after that. But it's such a clean model. It's such a clean setup. I've really been enjoying it. I know a lot of you guys have been too. The most you can do, continue to share this with people that you know are trading and that might be able to get some value out of this. I want to say this though, if you guys are watching this video still right now, mark it on your calendar. Tomorrow at 3 p.m. Eastern Standard Time, I have an absolute fire psychology video. One of the most powerful psychology videos I think I've put out. It's about mindset. It has nothing to do with trading, but it can 100% be applied to trading. But it's just about how you think, right? I'm a human too. I'm on this path of life, and I'm like literally like we're all on the charts together. But when I leave the charts, when you leave the charts, we got all sorts of things that we battle with, that we deal with, trying to figure out why we're here, what we're doing, guys. The Saturday videos are going to be that place we can come together and talk about the really important things in life. So I love you guys. I'll leave it at that. I hope you guys have a good weekend. If you guys want the best prop firm discount for Blue Guardian Forex prop accounts, I put the link in the video description. You could click on it. It's another way you can support the channel. I don't sell anything. So if you guys are going to get a prop account and you want to support us in that way, and you're going to get one anyway, you might as well buy it through my link. But I will see you guys on Monday. I will see you guys on Saturday if you guys are here for it. But Monday we'll be back trading again. I love you all. Have a great weekend.